The story of the UK is an economy that has got real momentum.
What is broken can be repaired. What is ruined can be rebuilt.
UK inflation is becoming much more homegrown.
We have huge potential as an economy in the UK.
This is a time to tell Israel there is a path to peace.
Our plan for the British economy is working, but the work is not done.
You're listening to Bloomberg UK Politics. I'm Lizzy Burden.
And I'm Stephen Carroll. Welcome to the programme. I'm somewhat reminded, looking at Lizzy Burden, who's practically levitating off her chair opposite me here, of one of my favourite moments in the TV series Will and Grace, and that's the I Told You So dance. Because, Lizzy, I think if you were familiar with this, you would be doing the I Told You So dance right now. Because... Go on, big reveal.
Well, listen to this. Britain's biggest asset manager, BlackRock, has effectively endorsed last week's episode of the Bloomberg UK Politics podcast, in which we discussed how Rishi Sunak and Keir Starmer's political careers in 2024 will live and die by whether they learn the lessons of 2022, which was that the market is the guardrail on British politics. So you've had this warning from BlackRock's Vivek Paul. He's the UK Chief Investment Strategist. He says, and I quote, "As inflation falls in the UK and we get closer to the general election date, major UK political parties may be more tempted to promise looser fiscal policy. And the more this occurs, the greater the likelihood of the return of the bond vigilantes." What did I tell you, Stephen?
Two of our favourite words. I don't think I've ever seen you so happy.
No, it's because it's so easy for politicians to forget the markets in pursuit of votes. But as the lesson of Liz Truss showed, ignore the bond vigilantes at your peril.
You are giving Debbie Reynolds a run for her money with that I Told You So dance, Lizzy Burden. We do have two of our experts to discuss what BlackRock have been talking about, and another really interesting story actually about student loans that we'll get to in a minute. So Bloomberg opinion columnist and resident bond king Marcus Ashworth is with us, as well as our UK economy reporter Lucy White. Great to have you both with us. Lucy, could you take us through a bit of the detail, first of all, of what BlackRock are actually saying? Lucy's given us the headlines there of the argument from Vivek Paul, but what, in a nutshell, what are they telling us? So
essentially, the summary is that they're worried that higher spending plans from either political party could unnerve investors. So obviously this is a similar kind of theme to what we saw in the aftermath of the Liz Truss election, as Lizzy was saying. And, you know, that's that uncosted high spending plans could really shake up the bond market, unnerve investors and push yields higher.
Marcus, you are ever the contrarian. Is BlackRock right?
Well, I would say I'm contrarian. I think I'm consensus. I think they're talking rubbish in the context that they're neutral on this, the UK market now, having been nicely long. And we have the Office for Budget Responsibility preventing anything like a blowout example as maybe gets blamed partially fairly on Liz Truss, but there were a lot of other factors going on at the same time, namely the Bank of England, which I'll come back to in a second. So I don't see how promises this year are going to affect the gilt market in any meaningful sense. What will affect the gilt market will be increased supply, and indeed whatever the Bank of England continues to do by trying to destroy our taxpayers' money by blasting out active quantitative tightening on the long end. So I think they're much bigger factors. Gilts have traded off quite sharply recently. There's a 20-year auction, which no doubt has gone very well today, along with, I know, Belgium and Italy as well. So it's not this overall big demand after a big bond sell-off. I don't see the bond market and gilt market in any rearing up in any real meaningful way this year. It sounds good, but I think there were other factors behind what drove the gilts crisis in September 2022, which we ignore at our peril and we just purely blame it on evidently poor political management from Liz Truss.
Well, I mean, you pointed this presciently. You pointed this out last November, that the world faces a tsunami of government debt, in a piece you wrote for Bloomberg Opinion then. And, you know, looking at those bond auction headlines this morning, it seems like there's great interest in buying UK government debt. What could dent that?
Well, the fact of too much supply at the wrong time, which is always a difficult balancing act. But I mean, clearly, gilts at the moment have sold off quite sharply at the start of this year, like a lot of bond markets, but more than others. And they deserve to be, treated a little bit with a stick from time to time, gilts, but they shouldn't be doing
Is that poking it with a stick or hitting it with a stick?
Well, I think more hitting it, actually. It feels like that. It has done for the last year or two. But I mean, I just think that, interest rates will come down possibly quite sharply over the course of this year. And that's going to be by far the bigger effect on bond yields than anything I think the politics can do, because I don't think politicians can promise anything big, anything meaningful, certainly for this year. Because the one thing that Sunak and Hunt have learnt is that they have to keep, the only thing they've got going for them at the moment is some element of stability. And yes, there will be tax cuts, and maybe they may be more than perhaps we should have, but nonetheless, I don't think it's going to rattle the scoreboards. Really, for the gilt market, as I said, much bigger influences from what goes on from the Fed, in turn, slowly but surely from the Bank of England. And indeed, really, the bigger thing is what happens with the supply-demand balance. At the moment, clearly they've set up for a bit of extra supply, and there's plenty of demand to take gilt down. I see no real clouds on the horizon.
Well, Lucy, let me tell you the response to BlackRock's warning from the Economic Secretary to the Treasury, Bima Falami. He said today, the bond markets are clear. Labour can't borrow to pay for their £28 billion a year unfunded spending commitment without risking a debt crisis. That means the only way to pay for Keir Starmer's flagship 2030 promise is higher taxes. The thing is, BlackRock's warning isn't just about Labour's spending plans, is it? Marcus highlighted the risk of cutting taxes too much at the budget. Which taxes are they potentially thinking about cutting?
It's worth noting, that the 28 billion that Bima Falami is referring to there is a promise that's already been scaled back. So this is the 28 billion of green investment. It was originally going to be 28 billion a year. Now it's an aim for Labour to be spending 28 billion pounds a year by the second half of Parliament. So, both the key political parties, major political parties, are alive to the fact that they need to be careful here, I think. In terms of tax cuts, we're hearing talk on inheritance tax. There's various other areas that the Chancellor is looking at the moment. But I think a lot of it's going to depend on just how much headroom he has, and just, where the areas are that are proving popular among voters. It's worth noting that, as well as the kind of traditional Tory voters that the Tory party will want to keep on side, it does need to kind of look at attracting younger votership as well. We've seen various studies over the last few months showing that the millennial generation are the first generation that aren't becoming more conservative as they get older. So we need to kind of, or the major political parties need to be looking at getting that kind of generation on side. It is worth saying as well, as Marcus mentioned, that we have seen record demand for the 20-year bond auction this morning. So, clearly some of those fears aren't quite coming alive just yet.
But Marcus, what could it be then that might actually upset the bond markets from a political front? Do you think there's just nothing that any politician in the UK is going to do that might actually cause another ruction, not perhaps on the scale of Liz Truss, but, is there anything that you'd be worried about or even watching out for from the current leaders?
It's the Bank of England. It's the Bank of England we have to worry about more. In the political sense, that if they do not cut interest rates, align with perhaps what the Fed may do, or even ECB, that will cause lots of political problems. I think that's the one sort of hidden thing which Hunt and Sunak really want to see is a series of rate cuts, because that's about the only form of economic momentum they could certainly could benefit from. Whether they see it or not, we shall see. But likewise, as I mentioned before, on the active quantitative tightening program, the sales of gilts by the Bank of England, that's something which hangs over the market, particularly at the longer end. That's something which could rear up at some point. But it's going back to the Liz Truss thing. It was the nature and the type of taxes that they tried to cut and how they went about it, which was a combination. It ran straight into a sort of hidden monster of a liability-driven investment sort of pension crisis which was lurking behind the surface.
And has that monster been vanquished now? Does that become a risk again at any point?
It's not as big a risk because it's now a known, but it's certainly something which needs to be very carefully worked around. And the Debt Management Office are very conscious of this. They've been warning for quite some while that the need for long duration is nowhere near as much as it used to be. That sort of fell on deaf ears when, obviously, from the furlough scheme onwards, the need to borrow more reared up under Rishi Sunak. The second that Truss got into power, she thought that she could ignore the bond markets. I think that's a lesson that's been very, very well learned in the UK now. Hence why I think Hunt and Sunak are very conscious of sticking well within the OBR guidelines as far as they can stretch them, and they already have by extending the horizon out to 5 years. But we all know there's a big problem coming into the next parliament, whereby there's no way that spending can stay where it is if taxes remain as they are. There just is a massive shortfall. So it is a big, and gilts have priced, I think, a lot of that in. And certainly we've seen from how the US Treasury market has worked, people can price supply in over time. And I think that's already been done. As I said, rate hikes have ended. I think rate cuts are the order of play for this year. I think that's going to be far bigger dynamic, and how quickly the central banks, are dragged into realizing that they've perhaps overdone rate hikes. That'll be a bigger influence on politics. However, clearly, I think Lucy's explained very clearly what's happened with Labour's promises, and I think they will water that down even further, because they've learned a lesson that offering to spend 28 billion may sound good, but the knock-on effect for the criticism they'll get from the media and elsewhere, and potentially bond markets, it just isn't worth the risk. So I think we'll have a very, very cautious and sort of quite tightly bound spending campaigns, should we say, and tax-cutting campaigns in the next few months.
And maybe some unhappy frontbenchers on Labour's side. Lucy, when we're thinking about higher yields, it feeds into another story you've been following today about student loans. The Institute for Fiscal Studies says that the Treasury is facing a hit of more than £10 billion per year as higher interest rates push up the cost of financing student loans. Why is that?
So previously, the interest charged on student loans was higher than the interest on government borrowing. So that meant that for loans that were repaid, obviously the government was always going to take a loss on loans that weren't repaid in full. But for loans that are repaid, it can no longer expect to make a profit. So that's because yields now are looking higher than expected RPI, retail price inflation. Yeah. And the government's now looking at an average loss of 15,200 per person per student. That's in the cohort starting last year. So it's potentially, the numbers are big, as mentioned, £10 billion. But at the same time, it's not going to directly affect Jeremy Hunt's planned tax cuts because of the way that student loans are treated in the official statistics. The wider point that this is expressing is that it is becoming more expensive for the government to borrow. But at the same time, as we heard Marcus say, there are growing expectations for rate cuts next year from the Bank of England. And that should help to temper some of those pressures. We had Oxford Economics saying at the end of last year that some of those growing expectations for rate cuts over 2024 had left the Chancellor with an extra £11 billion of headroom. At the same time, we've got, in November alone, we had government debt costs reaching 7.7 billion, which was the highest November on record. So it's a tricky picture.
Yeah, and it feels like it's layers every time that we look at kind of costs like these being added up. And as you say, the risks of higher costs of borrowing appearing as unpleasant surprises in many parts of the government's balance sheet. Marcus Ashworth, our Bloomberg opinion columnist, thank you very much. And to Lucy White as well, our UK economy reporter, for talking us through those stories as we're thinking about what markets might be thinking about when we're thinking about a general election, which we think is going to be happening in the second half of the year.
No, from bond market drama to drama on screen, the Post Office accounting scandal reenacted for Britain's TV watching public by ITV is continuing to dominate conversations in Westminster. Ministers say that the company behind the faulty computer system may have to compensate those who were wrongly convicted of theft if a public inquiry finds the firm responsible. Our reporter Sabah Meddings has been following the story and she joins us in the studio now. Sabah, this story came to the fore again thanks to the ITV drama. Can you firstly just remind us, for anyone who's not been watching, what the origin of the scandal is?
It really is quite hard to just explain how awful this is and how many years this has actually been going on. The Post Office Horizon scandal originated, well, really in the sort of the early 2000s when the Post Office, which is owned by the government here in the UK, decided to upgrade its computer system across thousands of post office branches across the UK. It got the Japanese computer company Fujitsu to design the software. It was a snazzy new till. Everything was going to be automated, digitalised, and it really sort of replaced, written ledgers in these post office branches with computers, with tills. But what happened quite early on is these postmasters, sub-postmasters, these are people who kind of operate a branch and may have a convenience store with a post office counter in there as well. They began to notice shortfalls in the till. They began to see, one day perhaps it might be a few £100, a few £1,000, and then all of a sudden, these men and women who operate in these branches found that they were having to cough up thousands of pounds to replace money that they'd been accused of stealing. Ultimately, what happens with the post office decided to prosecute these sub-postmasters. The post office has powers of private prosecution. Hundreds are prosecuted. They went to jail. They were bankrupted. Some even lost their lives. They lost everything. And here we are 25 years later, and some of those early victims are still fighting for justice.
Yeah, I mean, it's an absolutely incredible story and being brought to the fore because, as we say, of this TV series. So that's stoked public outrage over this issue, although it's fair to say there has been quite a lot of outrage over it for quite a lot of time now. That's in turn prompting politicians to call for action. What actually are politicians looking to try and do about this now?
Well, I mean, we've already got a public inquiry that it's meant to be looking into what happened, who's responsible and why. There is a compensation scheme, and those that were prosecuted are seeking to have their convictions overturned. So there are steps in motion already. But what's really happened with this drama that has got extraordinary number of people interested, that politicians are now having to kind of speed up their efforts, whether that will include expediting the hearings, whether it will be fast-tracking the appeals process, whether it will just kind of a mass exoneration of all these people that have been convicted. So, I mean, there's talks daily about how to speed this up. 150 million has been paid so far, but 1,500 of 4,000 people are yet to be compensated. So there's a lot of demand. There's public outcry. Politicians want to get this fixed quickly. Now that all of a sudden, despite knowing about it for years and having an inquiry and being aware of the facts, there is more mass pressure on this point.
Let's talk about the blame game, because I wonder whether politicians are taking enough blame over this. And conversely, Kemi Badenoch, the Trade and Business Secretary, says that journalists weren't interested enough in this issue at the time either. So is it really all politicians' fault?
Gosh, it really does. I mean, there's fingers could be pointed everywhere, really. I mean, the first journalist wrote a story about it in 2009. That was in Computer Weekly. And over time, I mean, there have been people looking at it. But I mean, there's business chiefs, there's kind of people that were running on the board of the post office on behalf of the government that have gone on to run some of the UK's largest companies now. What did they know? Politicians that were, on all parties were involved in some way at some point, whether they're responsible for the post office, whether they were, the campaigners say that they warned everyone from Ed Davey to Vince Cable to a whole host of big names. So, and Fujitsu as well. I mean, the company that designed this software and so they say was aware of some of these problems with the system. I think there is a bit of a blame game. There's also the inquiry that people are will seek to find out some of these answers. I mean, it's just the list goes on.
Yeah, and it is, and I'm glad you reminded us that it has been reported on since 2009 as well, because there is a sense that perhaps while there's a lot of attention being paid to it now, that nothing is being done for a long time, and that's certainly what's added to the frustration of these people who've gone through these incredibly long trials as well. Of course, the Post Office case is a story that's suddenly shot to prominence, as we've been saying. This is something that, of course, Sabah, fits into your brief as knowing everything that's going on in UK business. Do you think there are other stories out there that we should expect to see featured in ITV documentaries? Are there big things that are not documentaries, even drama series in the coming years? Are there big stories yet to be told or yet to be highlighted that perhaps have gone a bit under the radar because they haven't gotten the star-studded small screen treatment?
I mean, you'd love to see it, whether it's kind of the COVID contracts or Thames Water or other things. But I think the issue with this story is that these are not high-profile business victims or high-profile big investors who could afford expensive lawyers to get their case heard. These are sort of sometimes they might be sort of semi-retired, or they'd moved to they had one business. So although there are other stories that do get much more sort of high profile, whether it's LCF or other things, but perhaps the reason why this one just didn't, it was because people were so hurt and tortured from what had happened to them that they didn't want to kind of speak up or have the energy to do it, or they had health problems or they were sort of struggling to survive. So maybe that's why this story needed this big ITV drama to get the prominence.
Very serious question for you. Our hotshot business journalist, who would play you in the movie?
God, I'm not going there. Dangerous question.
Answers in a postcard, please. Okay, Sabah Meddings, thank you very much for joining us. Our UK business reporter there, bringing us up to date on what's been discussed in Westminster around that Post Office Horizon scandal.
Now, the CBI, the Confederation of British Industry, has a survey out that shows that business volumes contracted for the first time in 3.5 years. And although headcount's up, there's uncertainty about the investment outlook, hugely important for anyone who wants to lead the UK through the next few years. And the Chief Economist at the CBI, Louise Hellem, joined us here at Bloomberg Radio. She spoke to Tom Mackenzie and Caroline Hepker earlier today. Take a listen.
We've had a disappointing output in the services for this quarter, where we did see business volumes contract. And as you say, that was the first time since June 2020 as well. We do expect volumes to be broadly flat over the next 3 months. So I think that hopefully there is a bit more optimism going forward, but a disappointing outlook at the moment.
What does the employment situation currently look like, Louise?
So I think, as you said, we did see headcount growth accelerate over the quarter, and speaking to many businesses in the financial services sector, they are still looking at specific skills that they want to expand on, particularly after the really tough recruitment environment that we have had over the last couple of years. But I think that overall, when we're looking at labour market demand and looking at vacancies across the board, we are seeing those coming off quite a lot. And I expect that to continue going into the next year as well. We expect broadly, in terms of the wider economy, that we will see a bit of an uptick in unemployment.
Firms do expect to carry out some investments, though. How much do you think that can actually be put down to the Chancellor's full expensing being made permanent? So this is this tax break for making certain investments if you're a company. How much are firms investing?
So when we're speaking to businesses, and this is a measure that we expect to have a big impact on their investment plans, and is one of the reasons why we were championing the policy so strongly, particularly that permanence and the certainty that will give to businesses investment. And you can see actually from this survey that it is the first time that FS firms expected to increase investment in vehicles, plants and machinery, which is the area that this measure particularly benefits. So I think that's really positive going forward, and it's those kind of permanent, stable measures that we need to see in the tax base to really give confidence to investment going forward.
How much clarity do we have on the role that artificial intelligence is playing within financial services and could be playing in the months ahead as these new models keep being published, or at least new models being put on the market, and the likes of OpenAI and Google's DeepMind?
So I think that's a really interesting question. So many of the businesses I'm speaking to at the moment, this is a really big area of interest for them. I think, to be honest, there's still a big question about to what extent these types of models can be integrated, at least across the board. But I think financial services are definitely at the forefront of that. So it's a really great area, and hopefully one where the UK can really be at the forefront of adopting some of this new technology.
How do you rate the UK's appeal to foreign investors right now in terms of investment into financial services in the UK, obviously one of our key industries in Britain?
So I think the UK still remains incredibly attractive when we look at the global stage. I think obviously there has been a lot of uncertainty both globally and particularly in the UK in the last year or so. But it is an area that continues to attract investment, and obviously that is something that we particularly champion around the benefits that investing in the UK can bring, not only to the UK market itself, but globally as well.
Louise, it is, of course, a big year, or likely to be a big year in terms of UK politics. Very likely we get an election this year, if not, of course, the first part of 2025. How much confidence does the CBI have in the Labour Party, given, of course, the advantage they have currently in the polls, to support the UK's financial services sector?
So, as you'll know, the CBI is obviously politically neutral in all this, and we're engaging with all main political parties. We had a lot of engagement with the Labour Party itself, and actually, I think the fact that there is quite a lot of engagement at the moment is incredibly positive. Again, with all parties, there'll be lots of areas that we do agree on, and some that we've got a lot more distance to. I think one of the big things that we're calling for, and again, I'd like to see this from everybody, is around the financial services green strategy, and making sure that we are making sure that the financial services sectors can play its role on the road to net zero as well. So that's an area that we really want to see a lot of movement on from all main political parties.
So that was CBI Chief Economist Louise Hellem there. Interesting to hear her saying that businesses too are keeping a close eye on the bond markets. I'll continue my dance, Stephen.
I look forward to seeing its next appearance. That is it from us for today. If you like the programme, don't forget to subscribe. Give it 5 stars so other people can find it on Apple Podcasts, Spotify or wherever you listen.
This episode was produced by James Woolcock and our audio engineer was Marufal Hussain. I'm Lizzy Burden.
And I'm Stephen Carroll. We'll be back with more tomorrow. This is Bloomberg.
Bloomberg UK Politics. Listen weekdays at noon on DAB Digital Radio in London.